Good morning. All right, let's get a little ugly. Here we go. We'll just give it another couple minutes here and get started at 11. I am in Iowa, so Central Time. When you schedule, you get to pick the time frame and everything. So privilege. Hey, William, were you able to get this recording? Do you know? Oh, you're muted right now, actually. I, William, you're muted. I can't hear you. Okay, no worries. I just wanted to tell everybody if it was being recorded. Yeah, no worries. Appreciate it. I'm sure anyone that misses it would appreciate it if they were wanting to attend. So,
Right.
all right. Well, it's 11 o'clock, so we'll go ahead and get started. As I was just saying, William's trying to record this, so just so you all know, if you don't want to be recorded or anything, feel free to drop off. Um, my name's Travis Newton. We had a meeting a couple of weeks ago about just kind of account management and things like that. So there was a lot of interest in puts, so I thought I'd put something together and talk about that. Um, I am not affiliated with Carnivore in any way, any more than any of you. I'm just, a member of the chat. Somebody's audio's picking up there. I don't know, Mark. That might be you. It looks like as soon as, oh, there you go. Thanks. Yeah, I'm not affiliated with Carnivore in any way. I'm just a member of the alumni chat, just like all of you. This is not investment advice in any way, and I have nothing for sale. So I just wanted to cover that really quickly. Um, this today we're just going to talk about puts and what I do to sell puts for income. Kind of went over my introduction background in the past in the session a couple of weeks ago, but I've been trading full time for about a year um, after 25, 30 plus years in corporate life. And now I've switched to this new endeavor. So let's see. So yeah, puts for income. So I talked about this a bit before, and this document that I'm going to go from here, this PowerPoint presentation. I created a PDF and I posted it out in the chat. So some of you might have already read it. But basically, the first thing that I think you need to figure out if you're going to talk about puts for income is how much income do you need and what's kind of realistic. Now, I'll tell you right up front, what I do is not a cheap strategy. I mean, you're not going to be able to, you know, sell puts for income with $50,000. Now you can do the strategy with $50,000, but you're not going to make enough money to like live off of. I'm assuming that most of you, just given where we're all in this carnivore alumni chat and stuff, that's not really the situation. But you can definitely use it on a smaller amount of money. Um, and do really well with it. I just made up some numbers for just to kind of illustrate how I kind of go through this and what I've been doing. So I just made up a number, $8,000 a month to live. Maybe you need, maybe you're only looking for $2,000 or $3,000 a month to supplement other income, whatever. You can figure out the math yourself, but it's pretty straightforward. Ultimately, I feel like you can pretty safely and easily make 1% a month. 2%, you start to push it, and it gets a little more just aggressive, where you're going to be more managing the positions a lot more, taking a little bit more risk. But that's totally up to you. So just for this example, I just said $8,000 a month, $96,000 a year. And you just I just went through a budget, household budget with myself and my wife and family, and figured out what I needed. Big thing there is just those annual items. Don't miss those big ticket items. That maybe only pay once a year. And then I split that into 6-month buckets. So my checking account, I have half of that money, and that's what I pay my bills every month. Ideally, I'm topping that off every month. Pulling out of the trading account, so it never really at the end of a month doesn't get below $48,000. And then the other $48,000, so to basically have a full year's worth of cash on hand, isn't just in a money market. And in an ideal situation, you'd never touch that. It's just going to grow. So that's kind of just the logic that I've come up with. Again, these aren't the exact numbers that I'm using. I can talk about that in a second. But it's the same logic that I use. For the trades here, I kind of mentioned this a second ago. So 1 to 2%, I feel like is very reasonable. And for that reason, for me, if you're trying to do it for income, and of course it depends on how much income you need every month, but I think $200,000 to $500,000 is a kind of the sweet spot for this strategy in terms of making income. If you start to get over $500,000 or $600,000, you're probably generating more than you need, and you should probably be, or at least me personally, I'm going to be pushing that into other places to try to invest it longer term. And if you have less than that, that's fine. This will totally work, and I have an example of that I'm going to tell you about too. You're just probably not going to be like living off of it either. So it's just obviously everybody's on their own here, case by case basis. But yeah, so the way I did that was I started, and my goal was to kind of get half of that monthly goal per week. I look at it a weekly basis, and I track in a spreadsheet per week what I'm making, kind of what my net is every week. So with that, say $200,000, my goal every week at a minimum is 1% is $2,000. I'd like to make up to $4,000. So in that $2,000 to $4,000 range every single week off a $200,000 chunk of capital. And then just logically in my mind, the way I think about that is, if you're making half of that, you're gonna get the $2,000 side. That's the smaller side. Or if you're making the $4,000 side, the 2%, then you're even in better shape. But basically, the first 2 weeks at least are going to go towards your living expenses. So the first 2 weeks of the month, that's what you need. Now you've checked the box and said, okay, I've made enough to live. That's great. We can all eat this month. You've got another week is taxes. I mean, and it's just rough numbers, 25%. So you're just going to stick that somewhere else so it's safe, and you got your money to pay your taxes. And then the last week is just profit. So your account grows, your account value gets a little bit bigger. That's just pretty much how I've kind of segmented it and work on and look at it and think about it. Some of those nice months where you have that extra week, that's just bonus money. So go on vacation, go to the Gulf of America. For just some math, 1% a week is 57% a year. So if you're starting with $200,000 and if you get 1% a week all year long, that's 57% compounded. Now, granted, in this strategy, because you're doing it for a living, you're probably taking money out of that as well. So you're not going to end up with exactly that, but that's a really good return at the end of the year. 2% is 87% on the year. So, you're not going to be getting Dutch's 1,000% return doing this. And I'm going to talk about how I use this with Carnivore as well, but it's just stable. It's income. I mean, it's your paycheck as opposed to looking at it for a big win or maxing out what you can absolutely get in every dollar out of every trade. That's a totally different strategy. This is very much much more slow, much more stable, focused on income. So a couple things before I get into this slide. Actually, I do this in all of my accounts, really. I do it in 3 different accounts. and I use it differently. So I have my brokerage account, and it's basically 100% this put strategy. This is where I personally, I don't like it to be less than $500,000. If it gets below that, I'm a little bit concerned, that I'm not going to be able to make what I need. But if it starts getting over six, that's when I start peeling stuff off and moving it into. I use the long-term carnivore strategy. Those are the stocks that I'm looking to hold long-term. So that's kind of like that's my main focus of this, and that's where my income comes from. I have another account, a health savings account. So that account, I really only use it to pay my health insurance every month. So that's like $1,200 a month. So I need to withdraw $1,200 a month. That account, I don't really diversify it. I don't have to worry about taxes. I'd say, pretty aggressive with it, but I've grown that from $30,000 to about $55,000 in the last 10 months. So it's a almost double return, and I've been taking out 1,200 every month. Um, Now I usually only have one position in there, so I might only sell. I just take $55,000 and figure out, or whatever the amount is, and figure out how many puts of one thing I can buy, whether it's SOXL or a TSLL or something like that, and I just go all in and just do one position. And I usually leave 1,200 cash. That way, even if it has a bad week or a bad month, I still have my 1,200 to pay for my health insurance. So that's a different account where I do it totally differently. I don't really do any of the carnivore stuff in that, just because it's just one position. Um, and that one has no margin or anything like that. You're not allowed margin. You can't do anything else. You're basically just doing 100% covered puts. The last one would be my IRA. My IRA is my biggest account. I mean, it's retirement account. I don't know, a mix. Sometimes it's 50% where I'm doing this strategy, puts and things like that. So, and then the other, I'm doing a mix of the long term from carnivore. I'm doing a mix of Dutch's short term stuff, all of that. So it's kind of a mix. But I just wanted to just explain that I do this in different account types for different purposes. And when you're selling puts, it's very easy to sell a put, and the concept at the high level is super simple. But there's just a lot of nuance in it, and a lot that can go into managing the trade to make it profitable long term. And you see some of the folks in the chat talk about the bull put spreads and things like that. Those are all great, and selling the puts and then buying calls with the money, another great strategy. It just depends on what you're doing. But in my main trading account, where I'm trying to make a living off of it, I don't do any of that. I just want the income from the puts. That's it. I don't, because if I take the money from the put and then go and buy a call, if that call doesn't work out, then I didn't get the income from the put. So that's just the way I think about it. I'm just focused. You have your buckets, in mind, and you have different goals for each kind of bucket of money, and that's how I manage it in my mind. And the only other thing I would mention too, I guess, is if you're doing this in a normal brokerage account that has margin available, be careful, because it's very easy to often, if you think you're doing like a cash covered put, which is what I do typically, so if you're selling some puts and it's going to require $100,000 in cash to cover, that's great. But your system might apply margin to that, margin rules to that, so that it only requires maybe 50%, 33% or something like that of the 100. So it might only be holding $33,000 or $50,000. Well, it's really easy for you to go and then, oh, I have X amount of dollars available, I'm going to go sell more puts. Well, you might have just been like double on margin, and you don't want to do that necessarily. Now, that's your call. If you want to do that, maybe that's intentional, but you just want to be aware of that. So I make sure and keep track of actual whole dollars of how much I'm allocating to a position, not what Fidelity tells me that I'm allocating to a position. So just want to throw that word of warning out there. So these are the kind of the details. I sell cash covered puts. Now the way that works is basically I'm going to pull up a chart. It's easier to talk about, I think. Here it is. So I do this a lot on SOXL and TSLL. So here's SOXL. When you sell a put, it's at 21.86 right now. If I sell a put at say $18, what that means is if it gets down to $18, I'm buying shares, 100 shares precisely at $18. It doesn't matter if it goes down to 14, and it doesn't matter if it goes up to 30. If it drops below 18, I'm buying those shares at 18. So back to my slides here. So your selection of a stock is very important. And I use the carnivore research for this like extensively. I mean, all like the Monday call, I want to know which way the market's going. I want to know, kind of what sectors are hot, because if you're in a good sector, or if you're in, a good buying condition, then that stock's probably going to go up. So you can be a little bit more aggressive. You can get a little bit closer to the current price. Like you could sell a 20 and you're going to get a lot more money on an SOXL, like a leveraged ETF like this. You might make 3 or 4% for the week. No, I don't do that. I try to find the sweet spot, 1.5 to 2%. So I might be at 1850. I think I sold some this morning. I was a little over 1%, and I think they were 1850s. So your selection of your underlying and then the strike is very important. And like I said, that's where I use carnivore heavily for the research, trying to figure out, what sector, what underlying in particular. The other thing that I use, and I've put this out in the chat before, is Option Samurai. So Option Samurai is a little overwhelming. It has all of these predefined scans for different strategies. I mean, it can help you find things. It has videos and blogs and all kinds of information. And honestly, I don't use any of it. It's those just aren't the strategies that I want to use. If you do other strategies, this could be really good for you. But these are just ones that I played with in the past. But literally, I use this one that I've created. This is the wheel strategy. I'm literally not filtering on hardly anything. I don't want earnings happening, because I don't want to sell a put the week of earnings for something, unless I do that. I might choose to do that, but I don't want that in my standard, screen. I do want weekly options because I'm doing it every week. I'm not filtering on any of these things. You could I only want to see stocks that are, between $50 and $100, or stocks that are, whatever price range, or with their average true range being, X. You can specify all that. I do want some volume, so I have above 25,000 volume. I want it to be below. I want it to be out of the money, because you could sell a stock that's in the money, or you could sell a put that's in the money too if you want. But I don't want to be doing that. The probability of expiring worthless. So this is going to be highly related to the delta. I don't know if they calculate it slightly differently, but it's going to be close to delta. So I want something that's 75% going to, probability of expiring worthless. I want a reasonably tight spread. You start to get into spreads that are 50, 60 cents or $1, and you're not going to get a very good price, is the bottom line. That's closely related to the volume. Expiration date, I mean, that one's pretty obvious. And then you can filter on these other things, like you can filter on delta, these different things. The only other one I use, though, is return. I just want to see 1% or better. So let's see if I pick next week and I run the scan. This is my list. So I look through this and I try to decide which ones I want to consider for the week. Wolfspeed has been up here for weeks. They've got some legal issues going on. It's only $1.47 stock. The dollar strike, you're often getting 5 cents, sometimes more than that. So that's a 5% return. I mean, that's great, but I've never sold that one, but you certainly could. Sunrun's been hot. Things that have news about them often, things that have been really volatile are usually up here, because I just sort by return. So 5.25%. These are almost 5%. I usually don't play up in these because there's a reason that they're up here. QUBT is up 23.4% today, so that's probably why the puts are so high on it. I really don't like a lot of the solar companies. Those tend to be very volatile, so I stay away from those. But here's TSLL. This is why I'm often in TSLL, because it's usually up here. Leveraged ETFs are leveraged products are generally pretty high on this list. Since they're leveraged, they just get a little bit more premium. So yeah, you can sell a TSLL 11 for 25 cents. That's 2.23%. That's pretty good. If you want to be aggressive, I might go down to 10.5 and see what I get. Instead of 24 cents, maybe for a 10.5, you might get 19 cents or something like that. Soxel's right here, 19.5. you can get 42 cents for a 19.5 right here. Let's see what else is on the list. Here's an Ethereum based one. Tempest, we've traded that with Carnivore. Oscar, Dutch was just talking about Oscar. Archer, I just put something about Archer because somebody put it out there and I bought calls on that and it did really well. So Archer's up there. Here's TNA, the small cap, the 3X Bull, Upstart, QBTS. Oh, Brad's a big fan of that one. We got Hims, Rigetti. So there's a lot of carnivore names up here. IONQ's up here right now. That's pretty, yeah, so a 34. So, and yeah, for IONQ, wow, you get 44 cents on the 34. That's pretty good. So anyway, just wanted to show you, this is what I use. So when I'm coming up with those names, I'm usually only doing 3 or 4 positions. So, I'm not doing a whole bunch of these, and a lot of them I don't even really look at because I'm just not interested. Maybe it's the sector or whatever. But that's just the process that I go through. So that all just goes into, again, just the selection, picking the right thing, and I just kind of go through an example here of how that works. But essentially, what's supposed to happen if you're doing a cash covered put, and I just go through it with Tesla, if you sell a Tesla put at $390, it's going to essentially reserve $39,000 of your capital in your account. You still have the cash. It'll show as settled cash. It's your cash. It's just going to reserve that. And that's where the margin piece comes into play. Because instead of 39,000, it might only reserve 19,000. So that's where you just got to be careful with that. But know in your head that you're locking up 39,000 and just in case you get assigned. And then kind of the whole way that this works out is, if I don't, this is where the management comes in. If you get assigned, you just bought those shares at $390 for Tesla. If it goes up, you're not going to get assigned. You get your money back, and then the question just becomes management of it. And I do this a little bit in the chat. I talk about this. You have to decide: do you just let it expire worthless? So instead of selling it for 5 cents or 10 cents, say on a Friday because it's gone up, you can do that. That's usually what I do. And I like to do that. And then I can redeploy the money on Thursday or Friday, hopefully, for the following week, because you're getting a couple of extra days of premium for the next week. If you let it expire worthless, you're not going to be able to sell anything new until Monday. So then you're only going Monday to Friday, which you don't get quite as good of a premium. So that's kind of the trade-off there. It's just, whatever you're comfortable doing. You can let it expire worthless instead of buying it back. I usually put out a limit order to buy them back for 5 cents. I mean, a couple of them this week have already hit. I mean, it's only Wednesday. I just bought back some SOXL this morning, and I chose to go up to like 10 or 11 cents because I had just sold it a couple days ago and it had already made most of its money. So that's where you kind of get into managing it and just deciding what makes sense. When do you want to close something out? Is it worth keeping something for another week or week and a half for 5 cents, for 7 cents, when you could take that capital and redeploy it and get a full 1.5 or 2% for it? So that's just kind of the logic that's always going through my mind. So that's all when it goes your way. It gets a little tougher when it goes against you. And anybody that's been in Tesla the last week knows what this is like. And I was in TSLL pretty heavily. TSLL went against me really badly, obviously, like last Thursday. So I'll just talk about that for a second. So I had been selling TSLL puts. I had some at 14, some at 13, 13.50. I'd kind of been in this area because it was up high like this. So because this was like Friday, May 30th, when it was up this high. It started to come down, and it was already coming down before the Elon Trump, debacle. But then it crashed hard. I mean, it dropped 30% in one day. No strategy can handle a 30% drop. I mean, you just can't do it. If you had that strategy, you would be very wealthy and you probably wouldn't be on this call right now. So I had to decide what to do with those. I had that in 2 different accounts, and I did 2 different things. One of them, I chose to roll it. When you roll it out and for a credit, you're basically just delaying it. You're buying yourself more time. You're not going to make as much on it, but you can hopefully get your money back. And ultimately, because TSLL has come back up so much, that looks like it's working out pretty well for me. But I've rolled it out to like July 11th or July 18th or something like that. So that money is tied up, and hopefully I'm going to make a very small profit by mid-July. The other thing that you can do is I took assignment. I didn't roll it. I didn't close it. I didn't do anything with it. I just let myself get assigned at this, horrible price, down at, whatever, $10. It actually got all the way down to like 887. It looks like. So I took assignment. It had started to bounce back up. But eventually, even Monday morning, I wasn't comfortable. I didn't know that it was going to run up to 1280 because I probably made the wrong choice. But I sold it. I sold calls first of all, and then I went ahead and ended up selling the shares, which means those calls then became naked. So I had to deal with those. I closed those out too for a profit on a drop. But that's kind of what you're thinking about though. When it gets that low, you do have to do something. You can either roll it, you can just take the loss. You can just buy it closed and just take the loss, which I wasn't going to do on that because it was so low. You can also sell more puts to try to lower your basis. You can buy shares to lower your basis. There's a lot of options, a lot of things you can do to manage the loser. But it's kind of a case by case basis. It just depends, what do you think the stock is going to do ultimately? Because at the end of the day, if you're down $100,000 on TSLL, for example, what's the best way to get your $100,000 back? Is it staying in TSLL? In this case, that might have been best to just stay in it because it did really come back up. But the fact that you own it doesn't make it more likely to come back up. You got to be pragmatic. There very well could be a better place to put that money that's more likely to come back up. Had I taken that money and just put it in like SOXL's done well since then. Actually, it's down 1.1% right now, but it's done really well since then. So maybe it would have been a good option. Robinhood's done really well since then. I mean, who knows? But that's the question you face, honestly, on any stock. So even if you just bought a stock rather than sold puts on it, it doesn't really matter. If it drops 30%, you're in trouble and you got to decide what to do. So I just want to point that out. But those are some of the things that can happen. Honestly, a 30% drop is so unheard of, just absolutely unusual, especially for the stocks that I'm using for this, that I'm playing with. That is just not the kind of thing that you would expect to happen. So I wouldn't expect that any of you would be in that position, other than just a fluke like that. When you get this like Elon Trump, like personal sort of dig sort of thing going on. That's not going to happen to most stocks. I don't think Jensen's going to be doing that with NVIDIA anytime soon. And I kind of explained that just in written here. So if you want to read some more about that. Okay, good drink. So here's just kind of an example of just what an allocation of that might look like for that $200,000 to earn your $4,000. And this was back from May. So, and these were real numbers. I mean, I pulled them up. I didn't execute all of these. SOXL, 15 puts, 43 cents. So just to do the math, since I was doing a third of each position, I just literally took the $66,000 divided by 1,500 and said, okay, 44 contracts. So that's what I figured out. So I did 44 of the SOXL 15s, 18 of MSTX 35s, and 30 of UVXY 21.5s. And you can see all the premiums there. So you'd get 1,800 for that one, 1,700 for this one, and 1,200 for this one. Well, that's $4,800. So you used 193 of your 200, and that's a 2.5% return. I mean, that's, like I said, this is not exactly what I did for that week. I just pulled this as an example, but this is very much like what every week for me looks like. This is very, very similar. I might do 4 positions. I might do 5 positions. I might do 2 positions. It just depends. And sometimes, sometimes you have a carryover one because maybe you got assigned. So maybe you're then selling some puts in that one, trying to lower your basis, things like that. But this is pretty much what it looks like. I do mention again here, I set those limit orders for 5 cents. So if you closed all of these for 5 cents a piece, looks like I did the math there, $460. So whatever you brought in, you're going to spend $460 to close them out. But then you can then turn around. Hopefully that happens on Thursday or Friday. Then you can turn around and then redeploy that money. That's the idea of closing them out early. Otherwise, you just let them expire worthless at the end of the week. Hopefully, you don't have to spend that 460, but then you're not going to be able to redeploy the money until Monday. So you probably wouldn't get quite as good premiums. Down here, yeah, just talking about diversification a little bit. So yeah, I base this a lot on what Trader Z is saying in the weekly calls. So technology chips, he's been high on Nvidia for a long time, so that's where I'm using Soxel to kind of cover that technology chip space. MSTX is a nice proxy for Bitcoin because it's leveraged. It's really MicroStrategy. It's a long ETF for MicroStrategy. UVXY I like a lot for volatility. Um, the difference with UVXY is it's not a company. It's not going to zero. Like it's just not. We can have a bull run for weeks, and it's going to go down and down and down and down, and you can get buried in it pretty quickly. But at some point it's going to jump back up. That's just the nature of the VIX and UVXY. It's going to go back up. It's just do you have to wait 2 weeks, 3 weeks, a month, whatever. So I like that trade a lot, especially when it's down in this 20 and less range. When it's up at 25, 30, I don't play with it. I wait till it gets down to more like in the 20 range. But UVXY is a good one for volatility. So if you have another sector, just try to find a proxy for a sector that you like. I mean, that's ultimately what I do for the ones that, and a lot of that's coming from, Dutch and Trader Z. And that's how I pick these. Let's see. Oh, this is just kind of a summary at the end. Yeah. So if you did all of this, for the month, if you made your 4,000 a week on your $200,000, your account value at the end of the month should be 216,000 plus, right? So you top off your checking, because you should have used 8,000 because that was what you budgeted for. So so some of your money is gone there. So now you're down to 208. Money market you didn't have to do anything with. I take 4,000 of that and put it in another account for taxes. That way I've got it when I need to pay that. And then and now you still have a $4,000 profit. So now for the next month you're doing 204,000 instead of 200,000. That's pretty much it. I mean, at a high level, I don't know. If anyone has questions, or then if what else anyone wants to chat about. But I did want to get through kind of that. Is anyone doing anything similar or variations of that? Any questions?
I'm still kind of learning this, and so I've been following along what you're doing. I got that option Samurai, and it scared the hell out of me. I was,
There's a lot there.
yeah, I was looking at it. I made some notes as to what you're doing in it, and I'm gonna play with it a little bit further. But I like this idea and what you're doing for income, and I'm gonna explore it deeper.
Great.
And I
I can
thank you
send you
for
a.
doing this, by the way.
Oh, sure. I can send you a screenshot from Option Samurai too of what the filters that I have on there are, and you might find better ones too. Those are just the ones that I kind of settled on. They kind of met my objectives. So
Yeah, well, it's a good starting point for me.
Yeah, I think it's cool. I'm just doing long calls, kind of just doing it's rather than buying the stock, a lot of times you can get a lot more percentage.
yeah.
I love this wheel strategy. I just finished a book on it, reading. So I don't know, Travis, if you have any recommendations on just reading online stuff or going through YouTube stuff or a specific book. But I love this idea of just generating weekly income. It's kind of cool.
Yeah, definitely everything that I learned here, I steal from Trader Z here. I haven't had an original thought here. This is all out there. Um, I've watched, I don't know, probably 20 YouTube videos about it. I prefer YouTube video to reading a book, but I've just watched tons of videos, and it's nice because everybody's got a little different twist on it. Some
Right.
people are telling you exactly like what percentage of the current price to put your strike at. Some people are doing it by a delta. That's all fine. I mean, ultimately, I use return. That's what I'm looking, and I have to make sure that the price that I'm picking is something that I'm comfortable owning the stock at too, right? Um, to get a 2% return, if it's a really high price and right below the current stock price, I'm not going to do that. Like I don't want to get assigned. I'm trying to avoid getting assigned.
Right.
So yeah, there's just a lot that goes into it. I can't think of in particular of the name. There was one guy that I did like his explanations of it pretty well on YouTube, but I can't think of his name. I can probably find that, though. I can drop it in the in group me.
Gotcha.
But yeah, honestly, I'd like to look at it from different sources ultimately, because it just gives you kind of a broader perspective. I didn't really touch on that part either. If you get assigned, typically, because I'm focused on income, what I'm doing is I sell a call, and that's what completes the wheel. I sell a call for what I was assigned at. Some people want to make money on that. They want to go higher, whatever. That's fine. I mean, there's no wrong answer. But if I was assigned SOX, actually 2 weeks ago I was assigned SOXL at $16.50. I sold my call at $16.50. It was up. I mean, it was like 16.25. So my call was huge. I mean, I think I made almost 5% on the call. So that's great. But I don't want to go to 17 because I don't want to be stuck in it any longer for that account. Now, in my long-term account, my IRA account, then I might, if it's at 16.25 and if I'm assigned at 16.50, then I might go 18, 20, whatever. I might go further out, and because I'm happy to own SOXL at 16.50. I mean, that's a great price. So it totally depends on your situation. But for my trading account where I'm trying to make income, that's number one, making the income. So I want to get out of it at 16.50 if that's what I was assigned at. And knowing that because I'm making all my money on the puts and on those calls. I'm not trying to make the money on the shares.
Right.
Yeah, I didn't really touch on that closing the wheel part of it. And sometimes, if something's kind of hovering lower, as long as I'm making, 1 to 2% plus on the calls, I don't mind if I'm sitting in the shares for a few weeks. It doesn't matter. I still want to get out. I'd rather be on the put side of the wheel than the call side of the wheel. But you're still making your 1 or 2%, so it really doesn't matter. It doesn't hurt you in any way. The risk is when it gets low enough that you're not going to be able to sell a call and get at least 1%. And that's where I was with TSLL. It got so low, I just wasn't going to be able to sell a call. Little did I know it was going to come back up to 13, in two days. But that's just the way it goes. I had done some on Webull. It's probably been 4 weeks ago now. It was all in the chat, and I did get assigned that, and it plummeted. It not as dramatic as TSLL, but it was really down. And I had done really well on it on all the puts, but then once I got assigned, it really just dropped, and it was just kind of hanging out down there. And it got to where I just couldn't generate what I wanted, so I ended up taking a loss on that. And it's still down there. So that's where it's like you compare that to TSLL, you never know where they're going to go.
Gotcha. Do you ever trade just Tesla straight, or you like the leveraged?
So I like a lot of the ETFs for the puts because they're smaller dollar amounts.
Okay.
So if you do Tesla, say it's $300. I mean, that's
Right.
$30,000 per contract.
Gotcha.
So if I wanted to, it doesn't give me much flexibility. So if I want to do $100,000, I can't. I can do 90 or I can do 120, but I can't do 100.
Okay.
If you have a smaller dollar amount, you can increment it a lot better.
Okay.
Also, and the leverage gives you just a better premium.
All
Because
right.
I mean, I'll often look at Tesla or I'll look at Nvidia. Like, I like Nvidia. Nvidia is a great stock and I own it, but it doesn't really give you much of a premium on this unless you go a little higher or unless you're really confident that it's going to go up. Because then you can do one up closer to the current price and you'll make good money on it. But it's a big, each contract, you're talking, what is it, 140, so 14 grand per contract.
Yeah.
So, which is fine, but just doesn't give you that granularity. I'd rather do, is it NVDL? That's like the 1.5x NVIDIA one, and it's a lot lower priced. So you just get a little bit more. It's probably a third of the price. So you can just have a little more flexibility in sizing your positions. Thanks, Mark.
Cool.
Yeah. Any other questions? Oh, go ahead. Sorry, Mark.
I don't have any other questions.
Okay.
I appreciate you doing this. This is awesome.
Yeah, I mean, my hope was that other people would just see me do this and have other ideas and be willing to share what they do too. So I mean, we can do this anytime if people have strategies that they're using or want to talk more specific about certain things. Since we're all chatting anyway, I figured it's a good use of 45 minutes or an hour. We might as well share what we're doing. It's a lot easier sometimes to just talk about it and share it too, rather than just trying to type all the time. But yeah, I'm happy to share what I do. No problem. Yeah, with that, any other questions or comments or anything anyone wants to share?
I wanted to say that I appreciate you writing that up because it was good to be able to go back and review and look at some of the stuff that you're doing, and it makes a lot of sense what you were saying about Tesla. And I was really worried last week because I've got 300 shares, and I was selling short calls against it in one of my accounts, and I was really sweating it when
Yeah.
Trump and Musk got into that pissing contest. So I'm feeling a lot better today, but yeah, I need to reduce that position. And you taught me that. Thank you.
Yeah, in my income account, my trading account, that's where I was just too big in TSLL, and that was probably the biggest factor of just needing to get out of it. When I'm waking up, in the middle of the night thinking about it, it's like, okay, that's just too big of a position. I don't want that.
Yes.
Now, obviously, had I known it was going to come back up, totally different story. But you didn't. It's at 13 or whatever today, but it could have just as easily gone down to 9. I mean, if Elon didn't back off, it could have just tanked and stayed down there too. So I'm still happy with the decision I made, and I just put it in something else that has gone up, and I've made money on it this week. I mean, I'm not back to where I was, but I experienced a 30% drop too. So you can't expect to be back in a week. I mean, that's just not the way it works.
Right.
So, all right. Well, thanks everyone for joining. Appreciate it. There certainly seems to be interest. So if anybody's got any other topics they want to chat about or has any questions for me, throw it out there. And if it makes sense to have another call, we can certainly do that. I'm sure something will come up.
Maybe on another call, if you want to go over what you're doing about healthcare. I still have 11 months before I can retire, and if I can pull that trigger early, I'd like to learn more about it. So.
Oh, well, I just ended up buying something I just ended up buying a plan off the exchange. And there's somebody, I can't remember who it was in the chat was talking about that. And they did one of those, not insurance plans. Like there's a bunch of them out there. It's some sort of group sharing
Oh yeah.
coverage. I didn't go that route. I just ended up buying a plan. I already had the health savings account from my prior working. So I invest that and I've grown that really well. And I just use that to pay for my premium. So ultimately that's what I did.
Right. Okay.
Yeah. I don't get to formally retire. So that'll be a while.
I'm just tired of getting up and going in at 5 o'clock every morning.
Oh yeah. Can't blame me for that. So. All right. Well, unless anybody's got any other questions, I'll let you all go.
All right. I'll let you know if this.
Thanks, Travis. Appreciate it, man.
I'll send you a link to it.
Okay. Appreciate it. Thanks, everyone. Talk to y'all later.
Thank you, Travis.